Cristiano Ronaldo has earned $2.1 billion, more than any athlete who has ever lived, and in 2017, the Spanish government accused him of hiding part of it. He pleaded guilty. He paid a fine of 18.8 million euros and accepted a 23-month suspended sentence. And then he did something far smarter than hiding money. He moved to a country where the tax simply does not exist. That single decision is why he is a billionaire today, not the goals, so stop looking at him as a footballer. Look at what he actually is. A holding company with 4 revenue lines: contracts, brand ownership, diversified assets, and the layer almost nobody analyzes, which quietly multiplies all 3. Tax jurisdiction. We are going to take this apart line by line, and by the end, you will understand something most high earners never figure out. Because this is not billionaire trivia. Ronaldo's career is a live demonstration of 3 rules that decide how much money anybody keeps: where you earn it, how you structure it, and whether you are an employee or an owner. He got all 3 wrong first, then right. The zeros are absurd. The rules are not. They work identically at your level. Line 1, the contracts. In 2003, Manchester United paid a transfer fee of around $20 million for him. In 2009, Real Madrid broke the world record at roughly 130 million. Then Juventus, in a deal with Madrid, valued at 110 million euros. In England, Forbes estimates he was pulling in $60 million a year or more on the field alone. His first appearance on the Forbes list of highest paid footballers came in 2008 at 18.5 million. Today, it is 300 million over 12 months, 235 on the field, 65 off it. 4th straight year as the highest paid athlete on the planet. But a salary, however enormous, carries one fatal defect. It stops the day you stop. Line 2, the brand. In 2016, Forbes estimated Ronaldo generated $500 million in media value for Nike. In a single year, one man functioning as a global advertising channel. Nike answered with something almost no company offers: a lifetime deal reported at over $1 billion, roughly 18 million a year in base pay, plus royalties on CR7 branded product. And there is the word that changes everything: royalties. Not a flat fee, a percentage. That is the entire difference between renting your name and owning it. A fee pays you once, a royalty pays you while you sleep, for as long as the brand exists. Around that anchor, he built more than 10 long-term sponsorships. Binance, Herbalife, Therabody, $65 million a year before he touches a ball, which is precisely when the Spanish tax authority started paying attention. Line 3, and this is where the master plan nearly collapsed. When Ronaldo arrived in Spain, the country had a rule the world knew as the Beckham Law, named after David Beckham, another Madrid import. It allowed foreign residents to exclude non-Spanish source income from Spanish tax for 6 years. Legal, deliberately designed to attract talent. And for footballers, Spain removed it in 2010. His image rights ran through a structure built on that same logic. A company in the British Virgin Islands licensed those rights to an Irish company. Why Ireland? 2 reasons, both technical, both deliberate. Ireland holds an extensive network of double taxation treaties, which cuts the withholding tax on royalty payments. And under Irish domestic law, most royalties can be paid out with no Irish withholding at all. Money moved from Spain through Ireland to the Caribbean, taxed lightly at every stop. Spanish prosecutors saw it differently. In 2017, they charged him with 4 counts of tax fraud covering image rights between 2011 and 2014, alleging he had concealed roughly 14.7 million euros. They called it a voluntary and conscious breach of his obligations. On the 22nd of January, 2019, he walked into a Madrid court, pleaded guilty, and took the fine and the suspended sentence. Under Spanish law, a first offense under 2 years is not served in prison. He has always maintained he never intended to evade anything. Now catch the detail that almost every video on this subject misses. The case never touched his Real Madrid salary. That was taxed normally at the very top of the Spanish scale. Only the image rights were in dispute, which tells you exactly where the leverage in his income actually sat. And it explains his next move with surgical precision. January 2023, Ronaldo signs with Al-Nassr in Saudi Arabia. In June 2025, he extends it through June 2027. Forbes puts the contract above $200 million a year. Reports of the total package vary wildly, from $400 million to over $670, depending on which components each outlet counts, so treat any single figure with suspicion. But one number is not in dispute. Saudi Arabia levies no personal income tax on income derived from employment in the country. Run the comparison, because this is the entire point of the video. A salary that size earned in Spain faces marginal rates near the top of the European scale. Roughly half of it is gone before it reaches him. Earned in Saudi Arabia, it is not. Same work, same brand, same goals. A fundamentally different fortune, decided by geography. Forbes states it plainly. He has been able to hold on to more of his money there. And the deal did something more important than the salary. According to multiple reports, it granted him an ownership stake in the club itself, somewhere in the range of 5 to 15% by different accounts, worth tens of millions. Read that slowly. After 20 years of collecting a paycheck, Cristiano Ronaldo became a shareholder. He stopped being the asset and started owning one. That is the move that separates the rich from the billionaires. Line 4, diversification. And here, the footballer stops talking and the operator takes over. In 2016, he launched Pestana CR7, a hotel chain structured as a 50-50 joint venture with Portugal's Pestana Hotel Group. It now runs 5 properties, including one in Times Square that opened in 2021. In 2019, he co-founded Insparia, a chain of hair restoration clinics, now around 13 centers across Portugal, Spain, Italy, and the Middle East. And Insparia produced a tax fight that almost nobody covers, which is a waste, because it is the sharpest one in the story. Spanish press reports say the tax agency opened a file against the clinics for issuing invoices without value-added tax to hundreds of clients between 2019 and 2021. The clinic's position: alopecia is a disease, the treatment is a medical service, and medical services are exempt. The tax authority's position: a hair transplant is cosmetic, and cosmetic carries 21% VAT. That dispute is worth millions, and it turns on a single question: is it medicine or is it vanity? Beyond that, the CR7 label covers underwear, denim, footwear, eyewear, and fragrances, a product line he has been building since 2006. And from there, he moved into investing. Forbes reports he took a stake in the fitness technology company Whoop in 2024 and joined its $575 million round this March, which valued the company at $10.1 billion. He invested in the AI search company Perplexity in December, and he bought 25% of Spanish second division club U de Almeria in February. That is a funds portfolio, not an athlete's, but none of that empire functions without the final piece. Ronaldo has close to 1 billion followers across Instagram, Facebook, and X, the largest fan base of any human being on Earth. On Instagram alone, he passed 677 million this year, with an engagement rate above 6%, which for an account that size is extraordinary. Marketing firms estimate a single sponsored post from him is worth over $3 million, though those are outside estimates, not disclosed figures. He also runs a YouTube channel approaching 80 million subscribers. Understand why that is strategy and not vanity. Most stars who took Saudi money paid a price. They vanished from the European spotlight and their endorsement income fell with them. Ronaldo did not, because he does not depend on anyone else's platform to stay visible. He owns his distribution. He took the tax-free contract and kept a global audience. There was no trade-off. There was no sacrifice. So here is the secret, and it is not a training discipline, even though that is where everyone stops. Ronaldo applies to money the exact logic he applies to his body. Long horizon, compounding, zero tolerance for dependency. A salary is income that dies with you. A royalty keeps paying as long as the brand exists. A hotel appreciates while you sleep. An equity stake works after you retire. Every single move of his career pushes in one direction, converting temporary income into permanent ownership. And now the uncomfortable part, because this channel does not sell magic formulas. Lionel Messi reached the same destination through the opposite door. He turned down a comparable Saudi offer, went to Inter Miami, kept paying American taxes, and still crossed $1 billion in 2026. Same summit, opposite route, which tells you something precise. The tax-free jurisdiction accelerated Ronaldo's fortune. It did not create it. Ownership did. One more piece of honesty, because it matters on a channel about money. The billionaire label is an estimate, not an audit. Forbes says 1.2 billion. Bloomberg says 1.4. Different methods, different answers. On private hotels and brand equity, nobody can price precisely. Ronaldo himself has said he tracks his finances closely and believes he crossed the line years ago. So reduce 20 years down to what actually matters. 3 levers. Where you earn your income, because jurisdiction quietly decides how much survives. How you structure it, because the gap between a fee and a royalty compounds for decades, and the line between aggressive and illegal is drawn by a court, not by you. And whether you own anything at all, because salary stops the day you stop and capital does not. Ronaldo collected a paycheck for 20 years and got rich. He became a billionaire the year he combined ownership, brand, and jurisdiction in the same person. This is education, not financial or tax advice. But it is the clearest case study you will find of how large fortunes are actually kept. If this changed how you think about money, subscribe. On this channel, we take apart the strategies the elite actually use. One at a time. I'll see you in the next one.